Hi, David Bassanese here, Chief Economist at BetaShares. This is a snapshot of my latest market trends report for the month of June. And the good news is that in June, we did see further gains in equity markets. The MSCI All Country World Index returning 2.5% in the month. That was after a good 3.7% return in May. The Australian market also up, not as strongly. The ASX 200 returning around about 1%. And really, I think there were three key themes over the past month. Firstly, ongoing good US inflation reports. The May CPI came in a bit lower than expected after the April number was also in line with expectations. Now, the good part about this is it's sort of unwinding a trend we saw earlier this year where some of the US inflation reports were higher than expected and fear of inflation, staying sticky was permeating through markets. So we've had a couple of months now of good inflation reports. Markets are back into thinking that the Fed can cut interest rates at least once and possibly twice later this year. So that is supporting equity markets. Not so good news is in Europe, the European elections and a big outperformance, if you like, or increase in voting by the far right. The snap election in France, also seeing the far right gaining a high popular vote. And I guess the concern here is that it does lead to concerns about the stability of the European Union, potential increased fiscal spending in France. So a whole bunch of risk now in European markets, which at the moment is confined to Europe, but it could be some contagion effects, particularly if we get a rerun of some of the European debt concerns that we had, a decade or so ago. So that's something to watch. Locally, again, not too good news. We had the May CPI inflation report, which was higher than expected, coming on the back of the Reserve Bank of Australia, I guess expressing some concern that inflation so far this year has been sticky. We haven't seen further declines in annual inflation across a range of measures so far this year, and that's led to some increased risk that the RBA may potentially raise rates in August. So that's been holding back our market a little bit. But overall, the good news globally is that inflation in the US is starting to trend lower again, and the prospect of rate cuts is building. We're also seeing as part of that bond yields decline, and we had modest gains in fixed income markets through the month, and further good gains in technology and quality type exposures globally at the expense of more value exposures such as financials and energy. That's pretty much it for now. Thanks for watching. If you'd like to get more details of my market trends report, please visit the insight section of our website, and I'll see you again next month.